So hello everyone, this is JAVIII.fx and welcome to another class. This is indicator class. These are the indicators that I use, so I'm just mainly talking about that. So let's get into it. These are the 4 indicators that I focus on. I don't use anything apart from these. Now, an indicator is something that you use to determine the direction of price movement or determine to get a bias, right? So an indicator is like a signal, a buy signal or a sell signal, depending on, it all depends on what you are using. You will then know how to maneuver your trading based on the indicator or what it is actually showing you. Now, I feel comfortable using these, so these are the ones that I use. So you have the moving average, right? Moving average is the thing or the line that is always on your main chart. And when I say main chart, let's talk about this for a bit. This is the MT4, right? This big thing is the MT4, right? When you have an indicator on that chart, it will pop up in a window by itself. So the whole thing will be a main chart, right? If you didn't have an indicator on it, but once you have an indicator, you will have an indicator window below, right? So let's label this. This is your main chart, MC. Let's call it MC, right? And this is the indicator window, our chart window. You can call this a chart window, and this will be an indicator window, right? IW. So on your MT4, right, you would see a moving average that is flowing with the price. So you see something like this, a line, right? A line that is moving along with the candlesticks on the chart. And by the way, these are candlesticks if you haven't realized by now, right? So when it comes down to moving average, it's all dependent on the settings you set with it. Now you could use 14, you could use 8, you could use 20, you could use 30, right? But the thing is, the longer the length or the period, those that I mentioned were length or period, depending on if it's on the MT4 it would name period, and on the training view it would name either must be period, I believe. So whichever one you see is the same thing it means, right? So the larger one or the longer one or with a higher number would determine the length of the line. So if you have a 30 period or length moving average, that would take a longer time to follow price, that longer than a 8 or a 4 period or length, right? The 4 would move close to price, it would get very closely, while a 30 or a 50 would move, at a wider distance, right? So looking at this now, this is just simply how the moving average flow. The moving average also works as a dynamic support and resistance, just like the trend line, right? So you'll find that the market respects moving average, right? You need to find the moving average and the time frame that actually works together to give you a better area to get in for a particular trade, for a retracement or a pullback. So in a case like this, we'll have an impulse and the market pulls back to the moving average. Now, if you, let's say, for example, you are generally using a 30 moving average right here. So when the market comes back to this 30 moving average, you backtest this already, and you know that when the market comes back to test a 30 moving average, then it will continue up. So you would enter there using other confirmations as well, not just this. But this would be a one confirmation using the moving average to say, all right, this is an indication that the market will continue up because it's respecting my moving average. Now this is how you trade. When the market comes back to test it in an uptrend, then you buy it. If it rejects it, just like a trend line, just like a support. But if the market, let's say, breaks it, then you'll be starting to look for sells, right? Because it's now trading below the moving average. Now you'll be looking for sells. So when the market comes back now to test that moving average, that's when you enter for the sell. If the market is above, you buy. If the market is below, you sell. Very, very simple. So that's the concept of the moving average. Now, I like to use the exponential moving average. You have different types of moving average. You have smooth, exponential. You have the regular moving average, and so on. So that's it for moving average. You have the RSI. Now the RSI is where you look. This is called the relative strength index. There is more information on each of these that I'm mentioning in the document, so you have to read them. So this relative strength index is actually giving you area where the strength of the buyers or the sellers are weakening. it's a potential here to switch the market to turn around, switch trend, you know, change direction. So this up here should be overbought level, and down here is oversold level. So on the RSI you see a level down here and you see a level up here. Call this OB, call this OS, right? So with the overbought zone is where when the market comes up to the overbought zone, you're expecting the market to sell because the market is overbought. The sellers, the buyers are weakening. I know the sellers are trying to take control of the market. It's showing an era of a potential reversal, right? Likewise, you could use the RSI to match up with a level of resistance on the main chart or on trading view. So when you have a level of resistance somewhere up here and you see that the market is overbought, then this is an indication that the market will soon switch trend, right? This is one indication. To add with the overbought zone, you can use divergence. Now, divergence is something that a lot of traders look out for. It is just simply when the market, where the market is showing something different or the opposite to what is showing on the main chart. So you have right here on the main chart, the market creates a higher high, but on the RSI, the market creates a lower high, right? This is what we call the divergence, right? Check it out. So you have a higher high, but you have a lower high in the main chart. Divergence just simply means showing the opposite of the main chart. Now, a convergence is where the market would be showing the same thing as the main chart. So it comes up like this, and then it creates a higher high. So this will be the same thing as this. That's what we call convergence. So with this, you expect the market to continue the uptrend, but the divergence is showing a trend reversal. So that's what it is. All right. The opposite will take place for the oversold level now. So if the market decides that it wants to come down and form a low, and then come and create a lower low, and you see something on the RSI like this, then this is also a trend reversal. So you see the market creates a higher low, but on the main chart the market creates a lower low. This is what we call divergence, but it's bullish divergence, indication that the market will go up. Now, how would you trade this? It's when the market creates this other area right here, you could put a trend line or you could find some level of structure down here, and then you will try enter for a buy. Upon seeing a divergence, entering somewhere here. On the flip side now, if you want to get in on a sell trade where the market is creating divergence, a bearish divergence, how would you trade this? Is when the market comes up and creates a high, but on the RSI you find that the market creates a lower high. Now, this is where you'd find some level of structure, and then you find some rejection, some testing of the level to then take the market downward. Alright, now so for the AO, which is awesome oscillator, this now would be something similar to the RSI. This also shows where the trend is reversing, right? This is a oscillator, right? So check this out now. Just like the RSI, we also look for divergence with the awesome oscillator. So with the chart, when the chart window is actually, you know, overbought and it is showing divergence where the market creates a higher high, but on the AO it's showing a lower high, then this is also a reversal, an indication that the market will reverse. Now you are expecting a sell from this upon the market creating the high and showing rejections. Upon showing rejections up here, now you will try to get a sell entry, right, to take the market downward, right? Similar to the RSI, so it's a similar concept, right? And you do the opposite. Of course, convergence would be the same thing where the market creates a higher high along with the main chart, showing the same thing. Then of course it will continue the trend, but it's showing divergence, so it's a reversal, right? So if the market is now in a downtrend, you know, and then the market creates a lower low on the main chart, right? But on the RSI, or sorry, the AO, the market creates a higher low. Then you know that this is a reversal. Lower low, higher low. Right? So that's it for the AO, the RSI, and the moving average. The moving average, when the market is above it, you buy it. When the market is below it, you sell it. Right? With the RSI and the AO, apart from being overbought and oversold, you look for divergence, for reversal. Don't try to catch a trend when it's already gone. Don't try to catch a buy entry when the market is too high, or when the market is too low. Don't try to get a sell entry. So that's it for RSI, that's it for AO, that's it for moving average. With sessions now, there's an indicator on the trading view that I use to identify sessions. What this will do is it show me the New York session, it show me the London session, the Asian session, the Sydney session. Now I edit the settings to only show me the New York and the London session. Now why do I do this is to get New York and London reversals. Now of course you should know that New York and London session are two of the most liquid sessions out of the four. Alright, they are very liquid. You get a lot of movements during that time, right? And you get reversals. You get good entries. You get certain confirmations that you need, and that is what I would like to see when I highlight these things on the sessions. So it would pretty much mark off a zone around, let's say, London session right here, and it will mark off New York session. I will also show me the overlapping of these two. So let's say this right here in the middle is the overlapping of these two. So it will give me that clear indication as to what is taking place in each session, to give me that direction, give me some level of confirmation as well, to say after taking out this high or this low, it will go into that particular direction, right? So with that, I don't look at the Asian session much, nor the Sydney session, right? So that's it. With that said, guys, these are the 4 indicators that I focus on. You will see and hear more of them later on down in the course. With that said, peace.